welcome to the money episode of the Restaurant Incubator. So today we're going to talk about everybody's most favorite and least favorite subject, money, how it gets from the guest to your bank account. So this is not a marketing episode. This is not anything like that. This is about how cash flows through your operations. If you're a manager, a bartender, or server, of course you have some insight into how this happens, but unless you're an owner, unless you're in control of the bank accounts and everything like that, or you've been one before, this episode is going to provide you a lot of information that is crucial to you as a future owner, burgeoning owner, fledgling owner, whatever it is, anybody who has questions about where the money goes in an operation. Welcome back to the Restaurant Incubator, where my mission is to help you save time and money. Again, that's what we're talking about today with your restaurant project. My name is Brandon Sharp. I'm the host here at the Restaurant Incubator. As an executive chef, I earned 7 Michelin stars, and now as an owner-operator, I have 3 restaurants here in Chapel Hill, North Carolina. All right, so where does the money start? The money starts off in your guest pocket. They come to your restaurant, they sit down, they order from your server goes to the POS system, which stands for point of sale. Used to be a cash register, now it's usually a tablet, right? I'm going to use Square for the examples in this episode, since Square is the point of sale system that we use in all of our restaurants. They are not a endorser. They don't of this podcast or anything like that, but it's an easy example. It's a pretty widespread system. And what I'm telling you is going to translate across most systems that you will use today. Toast and Square are very similar, and there are many others, and they all have about the same capabilities these days. So once the guest has gotten their food, gotten their drink, they finish their meal, they get the check from the server, right? What happens then? They hand over a credit card. Let's say their bill is exactly $100. That's what they paid for food and beverage. We're just going to use that as a nice round example today to make the math easier. So the check was $100. They tipped 20%, and the state of North Carolina, here in Orange County at least, requires 7.5% sales tax. So the amount that is going to be charged to their credit card is $127.50. That's $100 plus a 20% tip plus 7.5% sales tax. So sales tax might be a dirty word to you. Get over it. Taxes are part of doing business, and if your business is doing well, you are going to owe taxes. If you try and get out of paying the taxes that you owed, you will end up in trouble. Do not do this. So the best way to account for that sales tax, which again, you are charging on behalf of the state of North Carolina, or I am charging on behalf of the state of North Carolina and Orange County. That's why I'm charging sales tax. So that money is never mine. The guest is giving it to me to hold until I pay it to the county and the state, the NC Department of Revenue, on the 20th of each month. So what's the best way to hold on to that movie? Well, if I was a brilliant day trader and had restaurants that did $30 million in business, maybe I would have some investment vehicles where I could earn interest on, that on that sales tax money as it accrued over the course of the month before I paid it to the state on the 20th. I don't have that. I don't do that. But what Square has is a fantastic feature that is free to you and is probably underutilized by a lot of y'all. You could also probably do it with your bank or maybe even with your credit card company, and that is setting up a separate savings account. Now, it's called a savings account in Square because that's what Square calls it. It's completely liquid, and it yields, and it has a 1% APY, which is an annual percentage yield. So only 1 penny on the dollar, which allows them to keep it very liquid, I'm sure. But anyway, what I do, I have my sales tax account in Square. So again, Square is my point of sale system. So all the money that I collect via credit card or debit card is going into Square before it goes to my bank account. Square is connected to my bank account, but the money goes to Square first, and for a couple reasons. One is because Square is my credit card processor also. So they take a cut. They take, I think it's 2.4% plus 10 cents per swipe. So let's call it $2.50 that they take out of every 100. So that is the credit card processing fee. You used to have to pay it to a company like Shift4 back in the day on your own. And now, now that you're hearing this and your phone is hearing me say this, you're going to start to get lots of ads for zero fee credit card processors for your business. And it's not free. It's never free. So you're going to be paying for it somehow. But anyway, back to the Square savings account. So Square, you can set up as many savings as accounts as you want to in Square, which is phenomenal. So again, I put in an automatic 7.5% withdrawal into that separate savings account, which sits in Square in the banking tab of Square under balances and accounts. So 7.5% from each sale is automatically set aside in this account. So what I do on the 17th, 18th, 20th of each month is I go to the NCDOR website. I calculate the sales tax that I owed by putting in all of the taxable income all the taxable income that I received in the month prior. That will generate how much I owe to the state, how much I owe to the county for transit tax, and how much I owe to the county for sales tax, because I'm in a very highly taxed county. Not all counties have both of those separate taxes. And then that will tell me how much that I owe total. So then my bank account is paired with NCDOR. This is how you pay sales tax online. And I transfer that money to come out on the 20th. Then I go back to that restaurant's Square account and I transfer from the Square savings account into my bank account the money that I've set aside for sales tax. And therefore, it was like I never had it and I never spent it, right? It nets out to zero in my account. It's only going to be in there for a matter of 12 to 36 hours, depending on weekends and holidays and withdrawal dates for the 20th and that sort of thing. Okay, so that is an easy way to make sure that you never fall behind on sales tax, that you're never left without enough money to pay sales tax. You do not want to fall into the hole with the government and be forced to get on some sort of payment plan with the U.S. Treasury or the NC Department of Revenue. While we are on the subject of sales tax, one thing that I got walloped by and did not know was coming in my first year of having Hawthorne and Wood open is business personal property tax. So that is something that your business is going to owe to the county and state, probably just the county. And it was like over $10,000 that I got hit with in the first August that Hawthorne and Wood was open. And it is that the amount that you pay for that is going to be based on the amount of FF&E basically that you own, furnitures, fixtures, and equipment. And this is on top of the property tax that your landlord will be charging you if you are paying a triple net lease. So ask your lawyer or your accountant to look into that early. And if you can, set aside another 0.5% in a business personal property tax account, again in Square, so that money is just accruing automatically. And so that when August, September, when that second half of the year comes around and you get hit with this huge tax bill that you weren't expecting, the money will already be there. Okay, so we've talked about how the money goes from the guest into Square. Okay, so you have $97.50 left after you have $97.50 left in your bank account that's going from Square to your bank account after you've paid tax, tips have been extracted, and processing fee for Square, right? Okay, so let's talk about that $20 in tips. So that is also money that is not yours. That belongs to the server. So picture your revenue as one stream, as this big river flowing briskly from the guest to Square into your bank account. Well, taxes and also tips, they were never your money. You were going to hold on to it from the moment that the guest gives it to you until you put it on the server's paycheck. Okay, it is not your money. So look at those two revenue streams as kind of tributaries going around the main source of revenue for you. They will go into your bank account, but then they will go right back out when it comes to, in this case, payroll for tips. So that $20 again was not yours, is not yours, belongs to the server, and whatever percentage you tip out to other support staff, bartender, hosts, however you do that. So keep that in mind. Okay, so now we're down to $97.50. So now I want to talk about something fantastic that I heard from an author named Casey Anton, who I hope to have on the show, and her book, Profit First for Restaurants. So Profit First is not a concept that she came up with, but she applied it to restaurants, and she has an extensive fine dining, upscale casual, all sorts of restaurant background in the Boston area, and has written a fantastic book that I highly recommend to you. Again, it's called Profit First for Restaurants. So what she does of that $97.50, so she takes the profit out first. And so I'll explain it I'm just going to skim the surface of this. So GAAP, GAAP stands for Generally Accepted Accounting Principles. And so that is what accountants and bookkeepers are taught when they go to school, when they are trained to manage money. And it works in a classroom, it works in a vacuum, it works in a sterile environment. It does not really work that well in living, breathing, dynamic operations like restaurants. GAAP is great, but what GAAP says is revenue minus expenses equals profit. That is the very simple math that you will see on a profit and loss statement. Okay. When people say top line, they're talking about revenue because that goes on the top line. When they say bottom line, and this is where the phrase bottom line comes from, that is the answer. The bottom line is the profit once you've taken expenses and everything that you owe away from the money that you brought in. Obviously, you want profit to be a positive number. If it's a negative number, that means that you've lost money. The problem is whether it's positive or it's negative in the restaurant environment, it very rarely matches what the corresponding delta or amount should be in your cash bank account. So, one, and I've said it many times, I will say it many, many more. Keep your eye on the cash, keep your eye on the cash, keep your eye on the cash, keep your eye on the cash. This is a cash business. If you don't have cash in the bank, you're fucked. Okay. It's as simple as that. So it doesn't matter what the profit and loss statement says. That is paper profit. You cannot take that piece of paper and put it in the bank. You cannot take that piece of paper and pay your investors or pay your vendors and say, look, I made this much money. I have this much money. It doesn't matter. What matters is what your bank balance is. So the profit first model. So the way that you can use the profit first model, again, is with those Square savings accounts. If you want to have 10% profit or 5% profit, set up a profit account in your Square savings. You can set up as many accounts as you want to. You can set them up for rent. You can set them up for different taxes. You can set them up for owner's pay. You can set them up for profit. You can set them up for cost of goods sold. You can set them up for labor. You can set up as many as you want. But by setting up the profit one, you are automatically extracting from every single sale 5 or 10 or whatever percentage of profit you think you ought to be making, and then you are paying expenses with what's left over. So the beauty of this is it doesn't magically work, but the beauty of it is you know exactly how much left you have to pay cost of goods sold. So that's your food, wine, non-alcoholic beverage, beer and liquor costs, right? And your operating expenses and your payroll each month as the days go by. And you can go to your managers, or if you are the chef, manager, owner, sole proprietor, whatever it is, you can do it yourself and make sure that you are controlling costs to stay within the amount of money that is left in the bank so you don't run out at the end of the month and have to pull money to cover payroll, for instance, from the profit that you've set aside. So GAAP out the window, profit first. That's the way to go. There's also something called a balance sheet. That's one of your two main financial statements. The P&L is one, the balance sheet is the other. The math on the balance sheet, it has a top and a bottom as well. It says assets must equal or must balance with liabilities plus owner's equity. Again, assets balances with liabilities plus owner's equity. So your assets are the cash and equipment you have on hand. There are also some other non-cash things, but also your rent deposit and things like that will go on there. Startup costs can go on there. Your accountant will do this for you. Liabilities is the money that you owe, whether that's accounts payable to vendors, whether that's long-term loans, short-term loans, anything like that, plus your owner's equity. And so if you owe more, if you have more liabilities than you have assets, that means that your owner's equity must be negative. Your owner's equity must be negative so that the liabilities and the assets balance. So again, the two numbers, number at the bottom of the top section of the balance sheet and the bottom section of the bottom section of the balance sheet have to be the same. A balance sheet must balance. There's no exceptions. You can't really get around that part of generally accepted accounting principles. Okay, so you set aside 10% of that $100, and that went into your profit savings account that you have in Square. Now, with that $87.50 that you have left, you are covering operating expenses, okay? Cost of goods sold, labor, and other expenses. And we'll add that 250 back to that because that is going to be a merchant account fee or a processing fee or however you and your accountant have decided to code it. So let's say you have $90, 2.5% is going to that. So 30, 30, 30 is the traditional breakdown between cost of goods sold. Again, that's the cost of your supplies that are you're going to sell, right? So food, beverage, basically that's it, food and beverage. And then 30% for labor, 30% for rent, utilities, paper goods, linen, cleaning supplies, chemicals, all those sorts of things go in the other expenses category. Again, the traditional breakdown is 30, 30, 30, right? Which leaves you with 10% profit. Rarely, if ever, does it break down that cleanly. The combination of cost of goods sold and labor is called prime cost. So your prime cost, ideally, you want it to be 60% or less. Does that ever work out? Rarely. Again, those things usually flex up. You may have a restaurant that, it's pasta only and it's vegan or something. And so you're basically paying for, flour and water. So cost of goods sold, food cost is very, very cheap, but maybe it's a super high touch restaurant and you need a ton of service staff and the plates are very intricate because vegetables, believe it or not, take a long time to prepare and to prepare correctly. So maybe you have more kitchen staff than you would normally have in a steakhouse or a burger restaurant or diner or something like that. So maybe your labor cost is running at 35% and food cost is only running at 25%. That still makes up a 60% prime cost. So paying vendors. So again, the money is going to move out of your operations account, which is that. So your operations account is your chief bank checking account. Okay. That's where the money goes after Square has taken out processing fees, the profit that you set aside, sales tax that you set aside, and the tips that you set aside. So that's where the money goes. It goes into your operations bank account. So for your vendors who have you on auto pay or ACH transfer or whatever it is that goes to your bank, that is the account that you're going to use to pay them. You may also use credit cards, and credit cards may have a bad connotation for you. Maybe you got behind on credit card debt when you were young, like I did, and like almost all people did. But if you can pay down a credit card to a zero balance on auto pay with your operations account every single month, I highly advise using credit cards for the vendors who will take them because you can accumulate points and points are very valuable. You can use them for cleaning supplies. You can use them for one-off retail purchases. If you want a nicer brand of Kleenex, if you want a nicer brand of toilet paper, for pens, for Post-its, for all little things like that, for staples, all these little, retail-ish things that add up. You don't, if you buy a case of staples to save money, it might take you 12 years to go through an entire case of staples. All you need is one box. Well, if you can get them using points on Amazon because of the money and points that you've accumulated using a credit card, that is a big value. Also, if you're sitting on a lot of points and no great way to use them, your credit card company will allow you to redeem them for gift cards, which make a fantastic present to your managers around the holidays. Going into November 15th, November 20th, if you were able to give them a gift card for $100 or a couple $100 that they can use to go Christmas shopping, that is a fantastic thing. It is basically free to you. It is a reward for paying your bills on time and running a sound business. And it is a perk for them. It's a win-win. And again, it zeroes out. So that's a great use of credit cards. So you will have some small vendors, especially local farmers, that like to be paid every week by check, which is fine. You're going to have to adapt to that, and you're going to have to be dynamic and flexible with the way you pay people if you want to get all of the products that you want. Why do farmers want to be paid via check? That's right, because they don't want to have to pay processing fees. They don't want to lose that 2.5% by having you pay them through Square. All right, I think that's about it. Payroll, cut and dried. Those tips will get applied to servers on a pro rata basis for the hours that they worked. If you are in a tip pooling system, if you are not in a tip pooling system, it will go, they will each have their own code that they punch in and ring in sales through in Square. And those tips will automatically be applied to the hours that they worked and tethered to their schedule. So then you've paid your bills. 1 month has come, 1 month is gone, and you are sitting there with that untouched profit in your Square savings account. What do you do with it then? Well, congratulations, you just made a profit. So take that money, you can distribute it to your investors, you can reinvest it in certain things, certain improvements in the restaurant, you can take it as a distribution for yourself, but that is a profit that you have earned. So two other things I want to say about profit and capital improvements. One, profit, again, it can be a dirty word to line level employees, and this is frustrating to me because sometimes when I say the word investors to managers and line level employees, I can physically almost see them bristle. They they know that we all work as blue collar and sometimes white collar workers to serve the guests who come in here, and we do it gladly. But there is a stigma around the wealthy, and we know that the wealthy are the ones who are investors. They can afford to take the risk. But the point for me is that they should be rewarded for taking that risk. Yes, the servers and cooks and stewards and back waiters who work here don't have and work for you don't have $50,000 or $100,000 to invest in a restaurant. And that's fine. But the fact that someone else has taken the risk and invested that money in your restaurant means that those stewards and servers and back waiters and cooks have a place to work and have an opportunity. And again, those investors deserve to be and expect to be rewarded for that risk by sharing in the profits of the restaurant. So keep that in mind as your responsibility to your investors. Take it seriously, be honest about it, be upfront with them. When things are going wrong, tell them. When things are going right, tell them. Just stay in communication with your investors. That is a crucial thing to do. And second of all, one thing that I learned from working in hotels for years is the concept of setting aside money for capital improvements. So capital improvements in most places are defined as something that costs more than $1,000. So this is something that will show up on your business personal property tax, that will increase your business personal property tax, but it will improve the life of your restaurant. So, and the perception of your restaurant and the experience of your restaurant for the guests. So for example, in hotels, capital expenditures might be changing the rugs in every room. It might be redoing the lobby. It might be building a new kids pool. It might be building a patio bar or something like that. So those are examples of capital improvements. And the way that you can afford these in your restaurant is, thank you, you guessed it, set up a Square savings account that is going to accrue or skim 1 to 3% from every transaction. That will build up to quite a bit by the end of the year. And so, for example, at Hawthorne and Wood, I saved for a year and a half so that we could rebuild our patio wall, improve the patio, and it cost almost $60,000 to make those improvements, but it has led to a much greater experience for our guests who are out there. So this year I'm saving up again, and I'm only pulling 1% out, but we are going to repaint the entire restaurant during a few days in January. So all those things, if you don't do them, you will end up with a dilapidated restaurant. You will be surrounded by things whose maintenance has been deferred, and the restaurant will just look like crap after years. I'm sure you've been to decent restaurants that, man, I remember eating here 8 years ago, and I'm pretty sure these are the same chairs with the same threadbare cushions, and nobody has even put a coat of paint on the wall. And so restaurants age. Restaurants take heavy use, especially the busy ones. The staff may not treat your stuff particularly well, and guests probably aren't going to treat your restaurant very well at all. So don't be afraid. In fact, you need to invest money back into the operation. Keep it improving, keep it updated. The staff will thank you. The staff will feel a sense of growth and betterment and improvement and pride in the space, especially if you communicate that to them and say, look, these are the improvements that we're making. I'm not just wringing every dollar out of this restaurant because I want a fucking Mercedes or something like that. No, I want this to continue to grow. I'm looking at the 10-year version of this restaurant, not the 12-month version. Lastly, I don't remember who told me this, but our director of operations, Neil Benefield, reminded me of it the other day. Keep your eye on the pennies, and the dollars will take care of themselves. If you want a little help with the budgeting and business planning of your restaurant, click the link in the show notes. I built some tools that can help you. And most of all, we don't accept ads. We don't do paid sponsors. Square is not, Square is not sponsoring this, believe it or not. Maybe they should be after this episode. But anyway, hit the drop down, whether you're on Apple, Spotify, iHeartRadio, Amazon, wherever you get this podcast, give us 5 stars and pass this episode on to 2 people who have a bright future in the restaurant industry. Thanks, y'all. Stay humble, stay hungry.